All right, my friends, I thought it'd be fun to compare the PE ratios of the top 10 holdings of the Vanguard Growth Index, the Vanguard Large Cap Growth Index, VUG. That's VUG versus the Vanguard Value Index, VTV, the Vanguard Large Cap Value Index. It'd be fun to do that, as well as look at the percentage of the top holdings for each of these ETFs. I'm telling you right now, the method to my madness is when you start seeing things approaching higher and higher and higher PE ratios, that's a significant bell that should go off in your head. Says, can this keep going up? And you got to wonder, if it can't keep going up, what does that mean? Well, it's not physics, all right? This isn't gravity that's guaranteed to go down. Theoretically, it could go up for infinity, but at some point, the greater fool theory will take over, which is you don't want to be the one holding the wet bag. So let's go into this. So the top 10 holdings, taking my trusty pointer, PVC pipe, of the Vanguard Total Value. Disclaimer, this is my biggest holding by far. The Vanguard Total, the Large Cap Value ETF, VTV, Victor Tango Victor. This is my largest holding by far. Probably represents 75% of my total portfolio, maybe 70. Johnson & Johnson, these are top 10. Berkshire, Procter & Gamble, United Health Group, JP Morgan, Verizon, Pfizer, Disney, AT&T, and Merck. All right, so what we have here, do we have any tech companies in here? You can maybe say tech a little bit. Verizon and AT&T, I'd say more telecommunications, but it's not tech per se, social media tech. Healthcare, consumer, Berkshire is off on its own. Finance, I guess that's it. All right, so I guess that's it for finance. I wonder what Bank of America's PE is. We'll look at that. All right, so this is from Vanguard's website, and this is as of July 31st, the most recent month, because we are now in August, so they don't have updated numbers here. So it'll be even worse on a PE ratio for this guy over here because the numbers have gone higher now. But anyway, in terms of price, but this is as of the end of July, what the percentage of holdings for the portfolio was. All right, so Johnson & Johnson PE is 26, Berkshire 23, Procter & Gamble 27. Remember, historically, PE ratios of the S&P 500 is about 15.5 going back to 1926. You got to look at that as a two-part approach. So we have the CAPE index, the cyclically adjusted price-to-earnings ratio, the Robert Shiller stuff that looks back over the last 10 years, and they adjust it cyclically to say, look, instead of just one going up and down, we're going to kind of smooth it out, which makes sense. And so if you look historically, we've been in a high CAPE ratio for many, many moons. And previously that indicated a decline of coming shortly. The problem with a CAPE ratio, it doesn't take into consideration competing investments. You got to look at everything in the big picture, not a vacuum. If you're just looking at stocks alone, you're saying, man, this is a pretty significant high price to pay even for value stocks that are trading in the 20s for PE. But you can't look at it in a vacuum. You got to look at the other investment options out there. You'd look at gold. You'd look at real estate. You'd look at bonds. You could look at small business startups, all this stuff. Small business startups, well, we know what's going on there. They're getting crunched, man. Crunched because of heavy bureaucratic regulation, because shutdowns, because of OSHA, because of Mine Safety Health Administration, MSHA. I mean, it depends on what kind of business you're going in, but all these different things, because of the county regulations. I mean, the regulations to start a small business, especially bricks and mortar, are through the roof. That's more than it ever was, for sure. Never mind the lockdown, the insanity of the lockdown. So that's going to be an expensive proposition. All right, then you got to look at bonds. See, well, bonds are just incredibly expensive. I mean, that's just a fact. People can say, well, the bond yields are low. Well, the reason the yields are low is because the prices are high. What came first, the chicken or the egg? It doesn't matter. If you're going to buy a bond today, it's the most expensive bond you've ever bought in the history of mankind. It just really is. So bonds are expensive. Investing in startups is expensive, incredibly risky in that as well. Real estate ain't no cheap real estate unless you're going down to Antifa land, and then not only is it probably not very, it's probably still kind of expensive, but you're probably going to be lose it simply because the Antifa mobs will take over. So real estate is expensive. The downtown real estate investment trust, you might, Buckhead, those will probably have some value there if you want to look at it, but I don't know. I don't think I'd be buying those. Not until these mayors get freaking shown the door and we get some real pragmatists who are business-oriented mayors like we used to have in Indianapolis. We used to have in New York City. We used to have in Milwaukee. Even though they're all Democrats except for Giuliani, but they're all, even Bloomberg was a pragmatist for New York City. Everyone's like, the stop and frisk is racist. Well, the stop and frisk reduce crime. That's a fact. And now we can go too far because the KGB reduced crime, right? But at the end of the day, Giuliani, they had a Democratic governor in Indianapolis back in the 90s, a Democratic, mayor, a Democratic mayor in Milwaukee back in the 90s. Those guys were able to do stuff for their citizens, school choice, lower tax burden and stuff, but they've been since replaced by crazy loons. I don't know about Indianapolis and Milwaukee, but I do know about New York City, Chicago, and whatnot. As much as you might hate Daley, I mean, he ran he greased the skids and made sure that Chicago was a place to conduct business. It no longer is. Sad. So anyway, you're not going to probably buy real estate and real estate investment trusts and property down in urban areas as long as they're run by insane lefty government mayors. Now, you might be in the suburbs, but I guarantee you and everybody else is already thinking about that. I mean, that's just a fact. So the suburbs are, I can almost assure you, are quite pricey. Gold, what did gold pass 2,000 an ounce the other day? Something like that. I don't pay any attention to it, even though I do own gold, and I recommend people do own gold. But if you're buying gold as a way to supplement your retirement portfolio, that doesn't make sense to me. So you got to look at everything outside the vacuum. What is my competing assets? What else could I invest my money in? And the facts are everything is expensive across the board. That's the whole point about low interest rates. We want to inflate real assets, or tangible assets, or even intangible assets, but we want to inflate assets. So even though these are high, look at the rest. 18 for United Health Group. That's pretty historically right on board. 13 for JP Morgan, 13 for Verizon, 15 for Pfizer. Disney had none. I'm not sure what that's about. Did they have a big write-off last quarter? I don't know. AT&T, 18, Merck, 20. So and now the top 5 holdings of VTV only represent 13% of the portfolio. That's it. That's big. So that means even if J&J takes on the chin, not that big of a deal. It just won't sink us for sure. So we got, probably on average of this, we'll just say a 15 PE ratio on the top 10. 22%, the top 10 holdings only represent 22% of the whole portfolio anyway. So that's just not that worrisome to me. In a PE ratio of, we'll just say 15 is spot on with historical averages. Plus, though, you got to look at the benefit of low interest rates, high real estate investment prices, and then high gold prices. So I think VTV is a buy. I just do. I keep saying that. I will continue to say that, and unless my portfolio, until I'm blue in the face, until I suffer, I'll continue to say value stocks are the way to go. They have more bang for the buck. I believe that. I might be wrong. I don't know. Let's look at VUG on the other hand. Watch this. Top 5 holdings represent 37% of the portfolio. And this is as of the end of July. The end of July. I can almost assure you it's even more now, probably 40 to 45%, which is scary. So here, 3 times as much, 300% more, the top 5 holdings in VUG than VTV. That doesn't ring alarm bells. I don't know what else would. Look at it. Apple. In fact, I think if we look at Apple, it was 10% right there. VUG, Apple was 10%. Yeah, Apple is 10.3%, and this is back at the end of July. I bet it's even more now. Microsoft was 9.7%. Amazon was 8.4%. Alphabet was 5%, and Facebook 4%. 10%. In Financial Planning 101, we don't want one position being more than 10% of any of your portfolio. And just in this fund alone, Apple is. Creepy. So 37%, I bet it's 40% now, just because the market has gone up in the last 2 weeks as well. And mostly driven by these guys. 35 PE, 37 PE, 127, 34, 32, 38, 28, 46, 92, 89. That's just too high. It's just as too high. Now you can make the argument, well, this, 35 on Apple, given that the interest rates are low and Apple's got a lot of cash, I would grant you that's a good R. I think Apple 35 in this day and age is probably not extraordinarily high, especially when you factor Apple, all the cash they have on the side, and they don't have that much debt. 127 is too high. I just, you cannot convince me otherwise. I'm sorry. 92, nosebleed. PayPal, that's NVIDIA, that's MasterCard, that's Visa, that's Home Depot. That looks good. That's Facebook. 32, Facebook, I don't know, man. That seems awful. That seems like a low PE ratio to me. But, 32 PE is what they're showing. So you go with it. That just still seems low to me. I would have thought it would have been higher. Google still seems pretty low to me for what they do. But look, I'm comfortable with Apple at 37. I haven't looked at the numbers on Microsoft. I'd be somewhat comfortable with Microsoft at 37 too. But the fact is that these 5 positions represent, 40% of the portfolio. That scares the living hell out of me, man. It does. And then we got PE ratios of on the top 10: PayPal, NVIDIA. Microsoft, MasterCard, Visa. I mean, the only one that jumps out at me, the only 2 I would actually be comfortable with, be Home Depot and Apple. Maybe Microsoft. I don't know, maybe Google. Facebook, I'm not. I just don't see long-term value there. I don't. But be it as it may, that is the difference between the two. And now what happens is, if you look at the S&P 500, historically 2/3 of the S&P 500 has been represented here. 1/3 has been here, 2/3 there, because the S&P 500 is a momentum, is a market-weighted portfolio. So the higher the stocks get, so if Apple is going like this and Johnson & Johnson staying flat, Apple becomes a bigger and bigger position of the S&P 500. In fact, if we look real quick, let's take a gander. Hey, buddy. What are you doing? Hey. All right, if we take a gander at, we'll just say VOO and see what their top holdings are as of the end of July. Time check. All right, cool. All right, let's see what we got here. Apple, Microsoft, Amazon, Alphabet. Yeah, look, so they got, so right here, Apple, Microsoft, Amazon, Google, Facebook, Johnson & Johnson, Berkshire, Procter & Gamble, Visa, and JP Morgan. That's interesting. So basically they're taking the top 6 here and 4 of these: Johnson & Johnson, Berkshire, Procter & Gamble, and JP Morgan. Not sure why United Health is not in there, but that's interesting. So, and let's take a look at his percentage with weighting. And this is as of the end of July. 6%, 5, 6, 6, 6, 5, 3, 2, 1.4, 1.4, 1.2, 1.2, and 1. All right, so the top 10 holdings represent 28% of the positions. The top 5 are 11, no, that's 12, that's 17, 20. Yeah, again, about 25% of the top 5, just right there alone. That concerns me to some degree. It concerns me on this side for sure. Anyway, I talked about that yesterday. I'm not going to go too deep into that again, but I just wanted to show you the PE ratios of the two. And remember, of the S&P 500, roughly 2/3 of this, 1/3 is that historically, and that can change any given day. I don't know what it is today. I just don't. But historically, that's the way it's been. Love to hear comments on that. Thanks now.